Today I wanted to make a quick video about using 4-hour pivot points when you have day when there is some important news or many data releases. And I checked Forex Factory today and we have non-farm payrolls, and this is 2 days after Fed meeting, after a rate decision. So markets awaits this data, and on many times during these days you will see that market is awaiting, so we do not have strong trends, we do not have strong moves ups, we don't have breakouts, simply more kind of range movement, and market awaits for data release, and then algo plays out and bigger players takes positions and so on. Pivot points, 4-hour pivot points, and also other pivots can be helpful during these kinds of days. And on this chart, you can see that I have 4-hour pivot points. These are Fibonacci pivot points to be precise. You can use classic pivot points. They have similar levels. This is my preference. I use Fibonacci pivot points. Before we move to example that I wanted to show you, I want to clarify one thing, because that's a common misconception, misunderstanding about pivot points among new traders. Pivot points can work pretty well during specific market conditions, but when we have very strong momentum, when we have strong moves, it's also common that pivot support resistance levels will not hold the price, and the main move will be much stronger. And I wanted to start with that example. You can see this is right after Trump announced 15% tariffs with Europe, and you can see strong move down, small bounce to R3, and again this is 4-hour pivot points. Again, strong move down. You can see that this first, second, third support levels, price went through them instantly, so there was no stop at these levels. And you have to remember that there are specific market conditions when momentum will be so strong that, yeah, of course, you have your pivot points. You may anticipate that maybe there will be some support resistance at specific levels, but it's not that price have to stop at some specific support or resistance from pivot points. Something to remember about when you are using pivot points: not always price doesn't have to do anything, and price doesn't have to respect specific pivot points. Still, there are days when momentum slows down because markets awaits data release, and today is that kind of the day. We are about 2 hours before non-farm payrolls will be released, and you can see right away that this is the start of the day. So this is our start of Friday, and maybe I will mark it over here. And from the start of the Friday, you can see that we had move during Asia session. We had move to R1 resistance, later retest again for new 4-hour pivot points, strong move down, sell off to S2 support and S3, so something between that, move up, some small stop around pivot middle, move up to R2, and move down, and you can see that this move down stopped again as S2 support. And it can be pretty common during market slowdown, when there is slower momentum, when markets awaits. The way I approach this, and this is the tip I wanted to give you, is to simply treat this S2, S3 levels as oversold, overbought. What I mean by that, you know how to use classic oscillators, classic indicators. With stochastic, if stochastic line is above 80, we are in overbought condition, overbought area. So anything above this 80 level is overbought, and we can expect at some point correction. Of course, remember that this overbought condition can take a while. Anything below this 20 line is oversold, and that's it. That's classic approach to using stochastic and other oscillators. My tip is to look at pivot points, at 4-hour pivot points, a similar way. Usually I pay attention to S2, S3 levels, but of course I also want to check price action around specific levels. But what I do, I simply see, okay, price is below S2. This is our S2. So we are approaching our oversold area. Price might go even lower than that, but I know that I'm at oversold area, and I know that we are awaiting important news release. So I wait for some confirmation from the price and maybe correction up, maybe some move up, but I do not expect that price will go from these levels and it will go to new highs of the week and so on. No, I simply expect some bounce from that area. So I expect some bounce, and maybe if I will go long, maybe I will take some profit around here. Maybe I will take some profit around here. Of course, I will pay close attention to price action. If there will be some shooting star, pin bar, and so on, maybe I will close the whole position. But yeah, it's not that I expect new highs of the week from that level, because I know that around here we will get non-farm payrolls. Some market probably will not go to these new highs, new lows. There will be some kind of the range move, and with pivot points I am able to see where these overbought, oversold areas are. Again, don't await price to bounce exactly from third support level, from second support level. As you can see, sometimes price will stop between these levels, like here, but that's fine. I look at these 4-hour pivot points simply as overbought, oversold areas. In that case, oversold. In that case, overbought, and I await, and I pay close attention to price action. One more tip that I can give you when you are using these 4-hour pivot points before news data is released: simple patterns such as MW patterns, double top, double bottom, 1, 2, 3 reversal patterns. These are kind of things that you want to look for, and it's pretty common that they will take place around this overbought, oversold areas. Quick example is that 1, 2, 3 pattern. So you can see exactly that we had stronger move down. This is the 1, 2, 3. We had move down, strong move down, correction up, but price again moved down. Price tried to move lower, but it failed. So because price failed to move lower and it closed little above this recent low, we had our 1, 2, 3 reversal pattern. Of course, it's good idea to wait for some confirmation. I'm on a 5-minute time frame. Maybe you want to switch to 1-minute time frame and wait for the break through this trend line. It's up to you. I simply wanted to give you that tip that this kind of reversal patterns, M pattern, double top, W pattern, and so on, maybe some head and shoulders. If this pattern is forming around this overbought, oversold area, there is a good chance that there will be some move in the other direction, because again we are awaiting news, so there is no point for price to make new highs, new lows of the week before that news is released. And last tip is that you can combine this information from pivot points, from 4-hour pivot points, with other information, from other indicators, from other techniques. For example, you may combine information from 4-hour pivot points and daily pivot points. You check where is important support, resistance from daily pivot points, maybe from weekly pivot points. Here you can see that again we are looking at euro dollar, but this was M line, and it was around daily S1 support and daily M line around here. And this is the same area where we had this 4-hour pivot points, and we had second support from 4-hour pivot points. You can combine this daily pivot points information with 4-hour pivot points information. You see that we had you saw that there was oversold area based on daily pivot points. There was a oversold area based on 4-hour pivot points. This should at least interested you as potential area where there can be a long opportunity for a short term, because again we are waiting news release. You can combine pivot points with Fibonacci. Maybe there is important retracement from higher time frames. You can combine with Fibonacci extension, classic support resistance levels, of course multiple time frame analysis. Maybe there is some important supply demand zone around the same level where there is 4-hour pivot point, overbought, oversold area, and so on. And of course classic price action, if you see that there is classic pin bar, classic dark cloud, and so on around these important pivot areas, then I pay close attention what can be next move from the price. Again, I know that in advance that there will be important data in few hours, and thanks to that I know that maybe price will move in a bigger range, and I can use 4-hour pivot points, combine them with other indicators, daily pivot points, retracements, and scalp for the day, scalp before this data is released. It's not 100% case. Remember that sometimes markets can be volatile, so do not approach this that it's always 100% case that before news release markets price will move between oversold, overbought areas based on 4-hour pivot points. In many cases price will do that, but there might be days when momentum will be, volatility will be so strong that 4-hour pivot points will be ignored. I showed you before that price doesn't have to do anything. Price doesn't have to respect 4-hour pivot points. There are days that price do not respect 4-hour pivot points even if there is some important data release, because something something is going on in the background. But it's easy to spot what price is doing from the start of the day. And if you see that day slow, Asia session day started slow, price started to react with 4-hour pivot points, then this might indicate that this will be a slower day before news release. But if you see that market is nervous, that price is not respecting these levels, then I will be cautious about opening trades. Maybe it's best to avoid trading during this day. It's not, this should be my last tip. It's not that you should trade this always. If you see that something is off, then maybe wait for news release, wait for a moment, let markets to digest information, and maybe then you will have better opportunities. Okay guys, so a quick video about using 4-hour pivot points when you have some important data release during specific day. I hope that this will give you some ideas how to use it in your trading day, in your trading strategy.